Charlie Munger has said so many times that you only need a few opportunities to get rich in the market. And I feel like this is one of those big opportunities. We already had a big opportunity in March. And if you missed that, you are missing out again, in my opinion. What I'm seeing in the market is that everyone's being irrational. During that whole March crash with whole pandemic situation happened, I bet heavily into that market and I made huge returns, 40% plus. Most people did if they were actually active and were considering that the market would return right back up. And that's the exact same thing I'm seeing in the Chinese market. We're seeing all these companies crash 40, 50%. You can see the S&P 500 and all the best top Chinese stocks crashing. And you're seeing this huge diverge in these two markets. And this is why I'm making another big bet. But before we really get into this video, guys, can you please like it, subscribe to my channel? I'm providing you with so much new content, man. Come on, please get me to 1,000. Hit that subscribe button, hit that like button. So I'm going to be referring right back to Richer, Wiser, Happier. And this is an amazing chapter that I see kind of converging on my thoughts. It's the Sir John Templeton chapter in Richer, Wiser, Happier. And he talks about the willingness to be lonely, the willingness to diverge from the crowd and actually not be in the herd, because the herd is where everything is warm, everyone's doing the same thing. But in order to make amazing investment returns, you got to do something different. You can't do the things that everyone else is doing because you're just going to get average returns. So I'm doing something different that a lot of people might not be able to do because it's just too risky. It's too harmful. You might look bad in the meantime. You might look bad for 1-2 years. Who knows how long you're going to look bad for? But that's what it takes to make these amazing results, in my opinion. So let's get into this first segment. So if you don't know, Sir John Templeton was an amazing investor. He had the Templeton Growth Fund from 1954. He averaged around 14.5% for like 38 years. And he has these amazing quotes, man, and amazing bets. Willingness to be lonely and the willingness to take positions that many people don't think are too bright. And that's what I'm seeing. People are thinking that Alibaba is a bad investment, Tencent, Nio. Think about it, all these stocks are down 40%. So what is the majority of people thinking about all of these Chinese stocks like Nio, like JD.com, like Alibaba, like Tencent? They're thinking these stocks are horrible, man. That's what they're thinking. But I am doing the complete opposite. So here are 2 lessons that I learned from this chapter. It's an amazing chapter on Sir John Templeton. In order for Sir John Templeton to become such a contrarian, he had to learn some good lessons early on. So during the Depression of 1929 to 1932, guess what happened? The Dow Jones crashed 89%. And he had to ask himself questions on, how do I buy these shares at a fraction of the price? The way to do it was wait for people to be extremely fearful, so they actually exiting the seats, they're selling their shares at a crazy fast pace. And that's what I'm seeing with Alibaba, with Nio, with JD.com. A lot of these institutional investors are running for the hills, man. The opportunity that we want to see. He honestly learned this again in Tennessee, where farmers were in distress and they sold their assets, their farms at a cheap price, man. When people are in financial distress, they sell their assets at cheap prices. And that's what he sees in the market, and that's why he's able to make these crazy contrarian bets. And he terms this maximum pessimism in the market. And that's when he wants to buy, when he sees that maximum pessimism entering the market, when people are desperately trying to sell their shares. And then this goes on to him making one of the biggest bets of the centuries. Basically, when the whole World War was happening, World War II, 1939, the whole Germany invasion was starting to bubble. UK's market crashed like crazy, like 50%. Americans' market was starting to crash. And guess what Sir John Templeton did? He was a contrarian buyer at that point. So what he did was actually, he invested $100 in 104 different stocks in the American market that were crashing, that were depressed, that he liked. Even if they were going into bankruptcy, he put money down during that time. He had to wait patiently for that to actually come back because so much stuff happened from 1939 when the whole World War was starting. We remember we had actually the Japanese bombing Pearl Harbor. So even when he made that bet, stuff was still rumbling, stuff was still happening, and he still had to remain bullish on the American economy. So when you make bets like that, we can just see the resemblance to what's happening in the market right now. We see these amazing Chinese companies getting crashed down for all these VIE structure risks, all these delisting risks, all of these people saying Xi Jinping is just gonna crumble the economy. But I don't think that's gonna happen. I'm making that contrarian bet that that's not gonna happen in the market, that these Tencents, Nios, Alibabas, JD.coms, whatever Chinese stock you want to pick, they are growing. They are making these huge investments for the future. They're establishing their dominance in the market. The Chinese market is going to become the biggest market soon, overtaking USA probably in 10 years or maybe lower. Who knows? But that's what I'm seeing from these companies. So that's why I have such a bullish bet on all of these Chinese companies, man. But remember, this is not investment advice. This is what I'm doing. So when Templeton made this bet, he thought that everyone else was wrong for not buying in at these bargain prices. And that's what he was seeing in the market. He held a religious faith, knowing that the economic times would get better. The US would emerge from this reckoning of World War II. So that's what he held on, and that was his belief, knowing that the stock market would recover. So knowing that took him around 5 years to eventually sell and get the winnings out of his stock market picks. Out of the 104 companies, 100 actually made it out with crazy profits. He made 5x on his money during this time. So when you're thinking about this, you have to understand that it might take a bit, but you have to have faith in knowing what you're buying and understanding the times and believing in what you're betting on and the companies that you own. So that's exactly what I'm seeing from all of these Chinese stocks like Nio, like Tencent, JD.com, and Alibaba. I feel like all of these stocks are soon going to come out of all this reckoning, all this havoc, all these 40, 50, 60% drops. I think that the market is not looking at this correctly right now. And in 2, 3, who knows how many years, they're going to come back up on top as the Chinese economy gets bigger, bigger, and bigger. That's it for the video. Can you please like this video, subscribe to my channel? I'm going to be coming back with more and more videos, so please subscribe. Thank you. Peace.